Good morning, everyone, and welcome to this morning's webinar. As always, thank you for your patience. We just wanted to set the recording up, and it's all. David tells me it's all done and dusted, and we are ready to go. Right. First of all, before we start, as always, may I just draw your attention to the disclaimer that I know you can see on your screen. As you know, this can be a very risky business, so please don't ever think of using money that you cannot afford to lose. So I think we should crack on because as you probably know, these last few days, markets have been in a bit of a roil. There's certainly been some great moves in the indices and in forex, reflected in forex as well. And although it's sort of quietening down a little bit, there's been some nice moves already this morning, and we just want to get straight in onto the charts because we've got some really nice VPA lessons and also some examples of where we can use our quantum indicators. But before we start, I've just had a quick run through the those of you who are kind enough to join us this morning, and I see we've got I can see some names I don't recognize, some new people. I can see some of our Forex program students, and I see also we've got some users of our quantum indicators. So you are all very, very warmly welcomed to join this session. Right, here we are. This is myself, and of course I will be with my husband David, who's sitting across me our desk, and I can hear him clacking on the keyboard, so I assume he's answering some questions already. And that's what we do. If you have any questions, you're more than welcome to put them in the chat box, or and we'll either answer them on air or just type the answer for everyone to share and to read. And as I said, we are going to be looking at the charts through the prism of volume price analysis. It's a methodology that David and I have been using for a number of years now, and which is all explained in the in a whole series of books that are up on Amazon. With regard to Forex, what we've done, we've bundled them together into what we call the Complete Forex Trading Library. They're not hardback books, they're actually the digital versions, but all those books together come to $9.99. VPA is your sort of technical analysis. It's the foundation of how you build your own technical analysis tactics, as it were, and it's based on the premise of the interrelationship between volume and price. And onto that, you can then add on other strands of technical analysis. We have traders that I know who use VPA in conjunction with Fibonacci, with Elliott wave, with moving averages, standard indicators, proprietary indicators, and the proprietary indicators that we use. I'm actually going to go on a slide from our own that we've developed from the quantum trading. From Quantum Trading, this is our own company, and for Forex in particular, we have developed this quartet of indicators that we call the currency dashboard, and it allows us to break down the market into first of all, the individual currencies, as we can see here with the currency strength indicator. Those of you who have it will know how it works, but those of you who don't, it actually allows us to see what is being bought and sold from the perspective of an individual currency on the different time frames, to see whether we have, as I said, strong buying or strong selling. Then we have to go and see, well, where is that strong buying and selling? Where is that most? Where is that going to deliver the best? What pair is going to deliver the best trading opportunity? And then we have the matrix, which is what we've developed, and the pairs are ranked. Then we have the currency array, which is again a ranking but a momentum indicator, and then we have the currency heat map, which gives us a global view of what has happened to those 28 pairs across the time frames. But we'll pick out, when we look at the trades on the charts, we'll actually see these in action. And as I said, I've actually got the pound CAD at the moment. There's been some pound buying, but what's interesting is in the time frame that I've been looking at pound Canadian, because there's some fantastic VPA lessons, and as I said, with the quantum indicators as well. But actually, the pound CAD is at the top of my matrix on the 30-minute chart. But is it a question more of, is it pound buying? Yes, there's pound buying, but is it more of a reflection that it's been heavily Canadian selling? It's one of the it's one of the issues with forex trading, because you have these two entities against each other, strength in one, weakness on the other. And what we're looking to exploit is the pair where that is best represented. We have, if you like, equally strong and equally weak on both sides of the equations, and you have this strong divergence. And from divergence, we then want to look for potential reversal. So lots and lots to cover, but I'm just going to go back a little bit because I think I've got these slides in the wrong order, because that is the technical analysis part of our approach to the market, but it's not in isolation. A part of the, if you like, the approach, the complete approach, is you have to also factor in obviously the fundamental, which all traders know, but we have a third strand to our analysis, and that is what we call relational analysis. As I said, it is explained in the books, where we look at the interplay between the different capital markets and how they sort of bounce off each other and really relate and interact with each other. And it's something that you really do have to understand. The most, at its most simplistic, if equities begin to sell off and we have a risk risk off, yes, David, risk off sentiment, people have, there's more fear in the market, then that is going to be reflected in certain currencies and certain currency pairs. Right, I'm going to stop there and get some charts up, and in the meantime I'll pass you over to David.
Thanks, Alex. Sorry, caught me unawares there. I was just checking out some pairs on the charts. Apologies. Very warm welcome from me, and wherever you are in the world, I hope it's a little bit warmer than it is here in the UK. We've got a cold spell at the moment that you wouldn't know we were late spring moving into early summer, but there we go. I hope it's warmer where you are. Great to have you here. If you have any questions during the session, if this is your first time, then please just drop them in the chat box. Happy to answer them there for you, or alternatively, if they are longer questions, we will answer them on air. Primary platforms we're focused on, Anna's on MT5. I've got NinjaTrader running on my screens. So we will flip-flop between the two, and we will see what we can dig out this morning. I'll pass back to her, and we will get going.
Okay, as I said in the little intro, the pair that I've been looking at is the pound Canadian, and one of the reasons I've been looking at it is the on the 30-minute. Well, in fact, it has actually sort of had a little reversal since we've come on air, and this is, if you like, the first stage of looking for a potential trading opportunity. This market is one of mean reversal, and what we as intraday forex traders, I'm assuming you're not going to be in this market for very long. It's not an investor's market, it's a trader's market. We're looking for trading opportunities on the faster time frames, that is time frames below maybe an hour and below. What we're looking for are those oscillations at the point where the trend, the move that we have seen on the charts is now ready to reverse. And we can see here, I've isolated the pound here. The pound Canadian was actually at the top literally 5 minutes ago, and it's already dropped down. And when it's at the top of certainly the matrix and here on the CSI, as I said, the CSI is when we have the individual currencies. On the 30-minute, this is the pound, this is the yellow line, and we've got the purple line, which is the Canadian. We can see the Canadian is still falling and the pound is still rising, but the steepness of this line is not as pronounced as the Canadian. So what I said earlier, the pound CAD was the strongest, if you like. It was the one with the most momentum in this in the time frame that I was looking at. But it's now sort of come off a little bit. So I said, well, is it more of a case of perhaps there's much more strength in the selling of the power of the Canadian than of the of buying of the British pound. And David, I think, are you looking at the selling of the dollar as well, which is the red line, which is the going line? So as I said, this is where we start. This is where the individual currencies, this is where we have a snapshot of what these individual currencies are doing. And we can see here that there's strong buying of the Swiss franc. As I said, seems to be strong selling of the US dollar. This is the 30-minute chart. We see the strong selling of the Canadian, but the other two commodity dollars, the New Zealand, we've got a bit of a divergence here. This in buying in the New Zealand, and the Aussie, well, it doesn't seem to be doing very much. So these lines, not only do they tell you in an instant what the market is doing, what is the sentiment towards these currencies on an individual basis, the steepness of the line, it gives you an idea of whether there's strong buying or strong selling. And if the lines aren't doing anything, if they're certainly all sort of bunched in the middle here, or they're traveling in the same direction in terms of a pair, for example here the pound and the Swiss franc, because they're going in the same direction, it's also giving you information in the sense that there's probably in a congestion phase. So a lot of information that you can gain quickly without having reference to all the individual charts. Now, as I said, that's just an individual currency. You want to see that where that is best expressed in which in the pairs. Now, as a trader, you may focus on maybe one or two pairs. You're not like perhaps David and I, we look at the charts, we look at the indicators, and we just look for a trading opportunity. And if that trading opportunity happens to be in cable, we will take a trade in cable. If it happens to be in a euro pound, we will take it in the euro pound. It's just the way we're quite comfortable looking through the 28 pairs and saying, yeah, that's where the trading opportunity for us is at the moment, and we're happy to go ahead with it. But a lot of traders don't like that. They like to really get to know some pairs. So maybe they start with one or two. And in fact, we do actually suggest that as a new trader, that don't start with just one, but maybe three. Look at three pairs. Some people like to do three majors. It's entirely up to you. We say maybe a major, maybe a couple of majors, and certainly a cross pair. Make sure they don't sort of look at the correlation between the pairs, because you don't want to end up in trading a little, what we call a little basket of pairs, and you're actually hedging yourself. A perfect example of that is the euro dollar and the dollar Swiss. Correlations, no, come and go, but it's a general rule of thumb, as it were. So we just look at a trading opportunity, first of all, based on what is the market sentiment towards a particular currency. Is it being bought heavily, sold heavily? And then we look and say, where is that buying and selling the strongest? Where is it likely? Primarily from a reversal perspective, because if something is being bought strongly, then at some point, because of this mean reversion, you will get an opportunity to take a trade on a reversal. It doesn't always work out, because it comes down to time frames. When you're looking at the faster time frames, a pullback, a reversal that you see on a faster time frame may be just that, and actually could be an opportunity to re-enter a move that is currently underway. So, and the reason I looked at the pound Canadian is because we are seeing that very much playing out on both the time based charts and the non-time based charts, which is the Renko. And the way I've set this profile up is I have a Renko here, which is non-time based, and the value of the Renko bricks, I will tell you in a second, are, you put the indicator on the 1 minute chart, and I actually have set it to the ATR, not the fixed box size, and it's actually telling me each box size is prints once 1.85 pips goes through the market, which is actually quite fast. And when these values are quite low, it also tells me that there's a degree of momentum in this move. So these bricks are printing out after 1.85 pips have gone through the market. I have the Renko. I then have a 3 minute chart here, as we can see, and this is the move that we've been looking at, and you can see this, and we'll look at this trend in a little bit more detail, particularly these little pullbacks here from a VPA perspective where we have the down candles and we can see the volume. This is a really beautiful example here where we have the move higher, which is actually a breakaway from the volume point of control that we see here. Volume point of control is where we have volume, price and time. It's like the fulcrum of the chart, and it's where there's been price agreement, where there's been no, up to this point, there has been no clear direction for this pair. If I just scrunch that down a bit and move it up, we can see here, yes. So this move here was preceded by this congestion phase here that we can see. We know it's a congestion phase because it's been rotating around the volume point of control. We also know it's a congestion phase because our pivots here and our fractals here, we have a range. It's a reasonably tight range. The trend monitor here has been flip-flopping between red and then dark blue and then red again. So you've got this constant change of colors under here. That is telling us that is congestion. The reason for that congestion, it's because it's been in the Asia session where the pound Canadian is not a pair that is heavily traded. So, you know, traders just ignore it. And, you know, if there is going to be any trading, it is going to be restricted to a very narrow range. Then we had the breakaway from this congestion phase. And a lot of traders don't like breakaways because they are prone to fake outs. They say, oh, there's too many fake outs from breakaways. But you have to remember that given that markets and instruments tend to be in congestion a lot longer than they actually trend, it kind of pays to understand, you know, when a congestion phase is you know, to recognize a congestion phase. A lot of traders don't even recognize them, and also understand when a breakaway is likely to be valid and authentic. And this is where VPA will certainly help you, because you need volume. Volume is this histogram here, as you can see. It's activity, it's participation. You know, if you haven't got fuel to drive this higher, then it's not going to go very far and it's going to be a fake out. But you also need fuel to drive the price lower as well. So let me just restrict that and do that again. So we have this successful breakaway. We also had some volatility come into this move. We can see that from this little volatility indicator that's part of the suite. And immediately what happens is the price retraces within the spread of the candle, and you think, oh, well, that's not going to carry on higher. And in fact, it does, and we know it's likely to carry on because look at the volume underneath that little down candle. There's really not very much in there. So that's simply just price was outside of the average true range, and it carries on higher. Now on these two little candles here, you do get an increase in volume on both of them, but they are very narrow spread. The spread of the candles underneath those volume bars, it is anomalous because volume and price, it's not, you also have to look at, it's a very subtle methodology. You have to look at the spread of the candle relative to, and also look at the volume underneath it. But when you get, so that candle there, let me just explain this. There we are. This candle here is a reasonable spread, and it's got wicks to the top and the bottom, but it hasn't got a lot of volume underneath it. You think, that's fine. Okay, I don't think that's going to go very far. Now the next candle comes in, and if you look at the spread of the candle, it's it's smaller than that one, but there's a lot of volume underneath it. And you think, now that is anomalous, because that amount of volume, you would expect that spread to be wider. Then you could possibly say, yeah, I think there is selling coming in. What that is telling you, that compression that you see there, that is telling you that it's actually price support coming in. So although you see the rising of the selling volume under here, you also have to look at what the actual candles are doing. So that's the way to read that. And then it carries on high. Now the next example we see here is another example, a similar example where we have, again, we have a reasonable wide candle with volume. Again, as we see here, that's kind of, I would say, in agreement. Then you have this candle and the volume is rising, but look at the wick to the bottom of the candle. Wicks are hugely important in candles and certainly in volume price analysis. And what distinguishes VPA from VSA, which some of you may have come across, the wicks tell you if there is price support or if there is weakness. That is price support coming in. Although that is higher than this one, you have a wick to the underside of the candle. And so it carries on higher. And in fact, we have been tracking this on the, where's it gone now? I've been tracking this on both the CSI and also the matrix. And if I just take the docking off and move that down to, let's move it down to a 12-minute chart. Here we are. There we are. And then what we're seeing here, this little pullback that we have at the moment, is we've seen the drop from the pound Canadian coming down here, and in fact it's jumping back up again. I like to keep it on the 30-minute. The 30-minute is like my benchmark chart. When you use multiple time frames, as I said, these are the two trading charts, the Renko and the 3-minute chart. With the Renko, that has stayed relentlessly blue. The trend dots have stayed blue. We've only had, this is the little pullback we had here. We had the trend dots go into grey, which is, as I said, we've got 3 colors, blue, grey and red. We really need, if we're going to see a true reversal based on the Renko, we need to see the trend dots turn red, and we also need to see the trend monitor turn red. We can see here when it was going back into blue, and a potential entry, which is what I use the Renko for. I did the trend dots went blue, this went blue, and this is the move that we're tracking at the moment. And at the moment, yes, it's going into a congestion. It looks like it's a little bit exhausted in this at the moment, but we've got London Open coming soon, which always produces its own fireworks and volatility. But from a Renko perspective, there is nothing to suggest thus far that this move is ready for a major reversal. This is the 30-minute chart. As I said, this is the benchmark chart. This is the move that we've been tracking here in these little candles here. And in fact, you can see this has been kind of drifting higher for a day or so. And we also look at the daily chart. The daily chart gives us context. It also gives me and us, the quantum users, the important levels from a support and resistance perspective, and it's actually bounced off this key level here, the S4. But if we look at yesterday's candle, this is the buying that came in before yesterday's close, and this has actually carried on. And now, what do we want to wait for now? Well, is a reversal trade going to be in the offing? We will have to wait and see until after London has opened, or is this going to be a continuation and we're going to have to look for potentially an opportunity to join this trend high? And there will be opportunities, but again, based on VPA and how that can help us join this trend, because traders don't like, it's called chasing price. They get very uncomfortable. They've seen a strong move and they think, oh, am I really, am I going to be able to join it? And that there are ways of being able to do that if you understand VPA. And finally, on the VPA section as well, this is where we've got another example here where we looked as though we've got some weakness coming in. We've got like a little shooting star, lots of volume underneath there. So you do see a minor pullback there, but look at the volume. There, the volume is falling on those little down candles. What is that going to tell us? That is going to tell us that the move is not going to go very far, and in fact it doesn't. It goes and it hits this resistance here. But with London coming in, this volume, we're going to get an inrush of volume, and we'll see what happens. Is there anything you want to add to that, David? On this? Oh, fine. See, David's always got something to add.
Thanks, darling. I've always got something to say. I have to say the 3-minute chart for this particular pair is just a fantastic example. There's so many lessons here. I think it was the 3-minute we're on. Yeah, could you just zoom out a little? Sorry, zoom out a little bit. Just Just a touch. Yeah, fine. Okay, brilliant. That's great. William, I promised to answer your question, and I'll do that now before I forget. Anna's on MT5. MT4 is the forex, more forex focused platform of the two. Really, MT4 has been the forerunner, but MT5 is its sister platform. MT5 is really multi-asset. It opens up all the other markets, so you'll find indices, you'll find stocks, you'll find commodities there. Whereas MT4 tends to focus very much on forex. That's really the heartland, if you will, of MetaQuote. In terms of functionality, there is more functionality in terms of MT5. You've got a much greater array of timeframes as opposed to MT4. There are other differences as well. In terms of using the quantum tools and indicators, it's not a separate license. Basically, the way it works is whatever you purchase from us, all our customers, they have the option to switch between MT4 and MT5 at any time. You do it through the quantum trading dashboard, which you run and manage, and then you transfer your indicators to whichever platform you prefer. So you might start with MT4. If you want to move to MT5, that's fine. You can do it at any time. You do it yourself. We don't get involved with that, but we show you how to do it. And there's no additional licenses required. It's just the same platform. So you can flip-flop, you can move from broker to broker. It's your choice, your call. You do that yourself. So I hope that answers that question for you. Just going back to this particular chart, which is just a great example of VPA in action. And I think one of the most important aspects is really to look at all the various elements of volume price analysis. It's not just about the relationship between price and volume, which you're seeing building on the screen in real time. And what you're seeing right now is the potential reversal with volume building, which is what we expect to see anyway, because we're moving from Europe into London. London is about to open, so we expect to see volumes increase naturally as a result of that. We expect to see volatility. We often expect to see reversals. And as you can see there, we're now starting to move down to test other aspects of volume price analysis, in particular support and resistance, which is a key plank. You can see the solid line that's building below at, where are we, 1.7554. That is a stronger level of price-based support. So if that is tested and ultimately taken out, then it will become a strong area of resistance. At the moment, it's acting as support. You can see there it's been tested. It's holding for the time being. But as I say, if that is breached, then it becomes a ceiling of resistance, as I'm sure you appreciate. Moreover, one then moves to look at the other aspects of volume from the perspective of the volume point of control, because if you look at the histogram on the right-hand side of this particular chart, that area between 1.755 down to, where are we, about there, where Anna's cursor is 7.544, so roughly a range of 10 pips. That region there is very light in terms of volume. In other words, there is very little congestion from a volume-based perspective to hinder progress to a move lower. So if indeed the price does break through that price-based band that you see at 1.755 with the solid line of the support and resistance indicator, which is indicating to you a much stronger level of potential support based on price, then if it does break through there, in terms of volume resistance, if you will, it's very light in that region. The corollary to that is on the move higher, as the price was building and moving through there, you expect price to move through there very quickly as well. So whether you're in an up move or a down move, as you approach these low volume regions and of course high volume regions, then they will give you a heads up as to the anticipation of price action through those regions. If you've got light volume ahead of you, the probability is that market is going to move through there fairly swiftly, because there's nothing in the way of volume that is going to provide anything in the way of support or resistance. And equally the same applies in terms of price. So the support and resistance indicator is price-based. The volume point of control indicator looks at the whole business of support and resistance from the perspective of time, because it brings in volume, price, and time. So the longer a phase of price action develops, then the stronger that volume region will be, as indeed it is always at the volume point of control itself, which is the heaviest concentration of volume where the yellow line is. And so if the price does break to the downside through that price-based potential support platform at 1.7554 and starts to move lower, what you would expect to see is a relatively rapid move through this region where Anna's cursor is. And then as the price moves deeper still, you would expect the market to move into a congestion phase as it approaches the volume point of control, because you've got the volume building down at that region. So looking at it from a trading perspective, if you were looking to take a short here on a possible reversal, what are you looking at in terms of the opportunity? Are you comfortable with the opportunity? Are you comfortable with the fact that perhaps you're only looking here at maybe, what are we talking, down to the VPOT, we've got to 34 and up to the support that's being tested now at 54. So we've got 20 pip range there. Now by the time, sorry? Do you remember somebody said, oh, you can't take double figures on? Yeah, someone said you can't take double figures on a 3-minute chart. Well, you know, I beg to differ, but there we go. The point of that of this is this. Is that enough for you? Are you comfortable with that? Are you comfortable with what you're seeing on the chart? Are you comfortable with what is likely to cause the pair to stumble or move into congestion phase? And is that 20 pip range sufficient for you? Because by the time it's breached that platform that's still holding for the time being, it's testing it, it's peeking through it. If it holds through it, then we could be onto the downside. But once that candle has closed, you've got a decision to make. First of all, is it far enough away from that price-based support platform that's now become resistance for you to take a trade? Are you comfortable with the distance it's moved away? And more importantly, once it has closed, is there enough fat in that particular opportunity before you think the market may run into further difficulty? If there's 8, 9, 10 points, is that enough for you? Because the prospect is that once it gets through that light volume region on the volume point of control and starts to move towards the volume point of control again, you've got volume building quite rapidly and therefore expect the market to pause at that region. Now, ultimately, of course, there's nothing to say that that move won't develop further, but if you're a scalping trader, that's the kind of approach you would consider. What's building at the moment in terms of the linear volume price relationship, if you will, you can see we've got London open with 5 minutes in. This is a 3-minute chart, so we've got one candle building, we've got the next one building too. You can see there on the first candle through the London session, what did we see? We saw an effort to rise. We had a wick to the upper body. It closed as an up candle, but there's a lot of volume under it, so it's looking a little bit fragile, a little bit weak. In other words, the market's tried to rally. The preponderance of volume of selling or buying in that candle, it is going to be more selling than buying, because if it was more buying than selling, that candle would have closed without a deep wick to the upper body. It would have closed as a nice widespread up candle supported by good volume. It hasn't. So there is a decent amount of selling in that particular candle. What you're also seeing here is the relationship between the trend dots and the trend monitor. You can see we're moving through the transitional colors. We've gone from the bullish phase of blue, we've gone into the dark red, transitional red, and we now come out the other side through onto the bright red. There's nothing in the playbook that says this indicator has to go through the traffic light. It's not a traffic light system that has to go through red, amber, green, and back again. Occasionally it skips a beat. In this occasion, it's missed the move to dark blue. It went through to dark red straight away and then out the other side into bright red. So it doesn't always follow. Sometimes it even goes from bright blue straight through to bright red. Just a fact of life. You can also see there that Anna's got the moving average on. Not sure what speed that one is. I don't use them. Anna does.
That's my 200 fractal adaptive.
Okay, it's a 200 fractal adaptive moving average for you folks. There we go. Sure, that explains that one. The joking aside, everyone knocks moving averages. I don't, because when the trend starts to build, they are very good at, and this is the difference, it's traders try to use them as indicative of changes in trend, and you've got to understand when a trend is developing without using moving averages to give you that information. But the way to use moving averages is simply this, because once a trend is underway, if you've got a 14-day or a 9-day moving average on the chart, what you will find is that price retraces, it tested a little bit, and then perhaps moves on in the trend. So they're, if you like, they're like a moving platform. So use them in that way. Don't use them as crossovers. Oh, it's time to get in, all that sort of stuff. They don't work like that. They're not designed to do that. They're just awful at it, as you can see, indeed, on the congestion phase there. Terrible. It just tells you nothing. But if you understand when a trend is starting to develop, you're using the indicators, using the volume, whatever it may be, applying a simple moving average is terrific, because, as I say, what you will find is, don't put it too close, have a 9 or 14, something like that. You'll find the price will tend to fall, and then up move, test it, continue higher, test it, etc., etc., etc. Just going back to where we are in terms of the price action, we've now closed below that strong platform of support, which I mentioned there at 1.755, and that is now acting as resistance, classical support and resistance technical analysis. The trend dots have transitioned through to red. They're now sitting above the candles, which is great. So we've now got the trend dots and the trend monitor working together. We're now approaching a low volume node. You can see there the volume's pretty light in that region. It's building a little bit as the market congests. But if we can get through that, then we're down through that region. It's not very big, but it's another 5 or 6 pips, whatever it may be, before we start to approach a further more consolidated region of volume immediately below. You can see the volume there, and at the bottom of the chart we've got, again, strong volume. We're in London, so we're 9 minutes into the London Open, so we've got 3 candles now that we can compare. So we've got pretty heavy selling on that last candle, wick to the upside, close with a flat bottom. It's trying to rally constantly the market, but it's being knocked back with the selling. And of course, you'll be looking at all the other aspects as well. You'll also see there that on that particular, the candle that's now building, we've gone back up. Now we're testing that price region from below. So it's now a ceiling. We're trying to force, the market is trying to force its way through that ceiling. If it's going to recover, then it's got to have some decent volume behind it. But that is now holding the price and capping that move. And it's just a really nice example of how a platform of support becomes a ceiling of resistance. It's just, again, classical technical analysis. So we'll just see how this develops. It's not moving particularly quickly, and of course you'd be looking at this not only on the indicators in terms of multiple time frames, you'd also be looking at it across multiple time frames. If you were scalping this, you'd probably have a 1, 2, 3 or something like that. You certainly have the Renko up as well. But I'm just talking at the chart, just giving you a running commentary, if you will, of what is developing literally in real time. The other aspect of this, and why it's developing, and the other aspect of this chart also is, as we approach that ceiling of resistance up at the top there, again, it was building the support. The resistance ceiling was building up at 1.7567 up at the top there. That was tested 3 times. So just looking at it purely from a price-based perspective, you could say, well, the market's tested it, it's tested it again, it's tested it again. So just purely, without anything else on the chart, just looking at it from a price-based perspective, there is some weakness developing there, because the market's trying to get through a price level. It's not getting through there, and it's looking a little bit toppy. And of course, that will be further confirmed by looking at your currency strength indicator, the array, currency matrix, and of course, teasing the whole thing apart into what is the primary driver now. Is it pound selling that's driving this? Is it CAD buying that's driving this? What are my drivers for this move? And in addition to that, are those buying and selling sentiments reflected across the complex for both of those currencies? Because if they are, then this is going to be a strong move. Now it's starting to develop further. We're moving through that light volume, the low volume node I highlighted at the start of this move. It's a little bit slow, but it's not, where are we now? We're down from 54 at that platform. We're down to 44. So that's 10 pips. Okay, take off the spreads. If you've got in there, take off maybe a time of entry. You may be 4 or 5 pips up to the good at the moment. It's developing nicely. Everything's supporting that aspect, that view of the market that this is a bearish move. trend monitors continuing to hold as red. The trend dots are nice and red. They're sitting above the candle, so they're adding the downwards pressure to this move. We're now starting to move to test a price-based level, which is less strong because it's the dash line on the support and resistance indicator, but nevertheless it's a decent level. So that could come into play. If that's taken out, terrific. We could move down to the next level at 75.39. And at that point, we start to move into pretty deep congestion as far as the volume-based support and resistance is concerned. So we expect at this point to see the market start to slow up. And certainly as it gets down to the yellow line of the volume point of control itself, you would expect congestion to build. So by that time, if you're a scalping trader on this move, you would expect to be out. Certainly I would be if I was scalping this, because I don't particularly want to sit through another load of congestion like you've got on the left of the chart and wait for however long that is, 2-3 hours of tedium of waiting for the market to break away. I'm not interested in that. I'm interested in the trend at the moment. And it comes back to what Anna said about whether you want to join a trend, which I understand the aspect of that, which is chasing price. If you're not comfortable with what you might feel is chasing price, and that's certainly pertinent to a lot of traders because they don't understand reversals, they don't understand volume relationships, and they don't put it all together with support and resistance and everything else. But if that's something you feel uncomfortable with, you may be more comfortable looking for reversals. I have to say, I personally, I prefer looking for reversals purely because I'm a bit greedy and I like to get in early, but I'm also quite happy to lay more risk on the table to pay the price of getting in early. It's a little bit, I suppose, an analogy I can think of off the top of my head is if you want to get the best seats in town, if you want to get the best seats in the auditorium, you pay a price for that. That's it. And it's the same here. If you want to get the best position in the market, then the reversal is the place to be. But there's a price to pay. And the price on this occasion is you've got to set a wider stop. The payback is that you maximize whatever it is this return is giving you. If you take this as an example, and let's suppose you saw this reversal coming up and you got in at 67 or there or thereabouts, you might have put a stop loss on of maybe 10 or 15 points, which may be way higher than you would normally put on as a trend scalping trader of maybe 3, 4 or 5 pips. Let's say it's 15. But look at the payback you're getting now. You're coming from 67 down to 44. So you're looking at over 20 pips. You know, that's how it works. If you're looking to get into this as a trend trader now, you may be taking 4, 5, 6. You may be comfortable with that. You know, that's the decision criteria. Now, what's interesting at the moment is look at the volume profile at the bottom of the chart. What's happening to that volume? It's falling away. Now, you know, this is all in the context of London. So just bear in mind that we can only compare, we're on the 3 minute, we're 16 minutes in. So really we can only compare the last 5 or 6 candles. That's really all we can look at. But the move is developing. We had a little bit of buying coming in on the last candle. We've got a nice down candle developing now. We're starting to move to test another level of price support. Looks as though it's possibly going to blast through that. This candle that's building now, if it does close as this widespread with very light wicks top and bottom, what you want to see with it is some decent volume. And it's, how much longer have we got to go on this one? A little bit. So what you're looking for now on this candle is for a continuation of this move, you want to see a nice widespread candle and good volume supporting it. In other words, no anomalies. So we want to see the two in agreement. Price is in agreement and volume is in agreement with what we're seeing on the chart. So once that candle closes, we'll see how that pans out. You get a sense of what's going on there, that there is some buying coming into this now, because if it closes with a deep wick, as it looks it might do, with some strong volume, then what that is telling you is that there is buying now moving into this market. And that's no surprise, because as I highlighted on the 3 previous candles, you've got falling volume. So you've got falling price, falling volume. What is that telling you? That's telling you that the selling pressure is waning. The sellers are moving out of this market a little bit, and you're starting to see some buying coming in. Not huge, nevertheless it's there because you've got a wick to the lower body. And let's just see how this one closes off in terms of volume profile. See if it closes above that that support platform as well, potential support now. So we've got 2 levels in there. If Volume's just getting up to a decent level, climbing up to our average line. See if it gets above the little white dash line, which is, it just gives you a heads up. Okay, it's good volume. There's some decent buying in that candle. There has to be, because there's a big wick to the lower body and decent volume. It's not well above average, it's average. So it's just giving you a sense that there is some buying coming in. Now that may be enough for you to close out that position. You've then got to go off and look at all the other aspects, where, what's going on in terms of the CSI, in terms of this time frame, other time frames, what's happening on the 1 minute, the 2 minute, whatever it may be. And that is how to read a chart and apply volume price analysis in real time. And that's the sort of conversation that once you understand VPA and understand the methodology and apply it using all the other indicators which are there to help. The volume price analysis is the underlying methodology. The indicators are there to help you, to give you information, to give you that little bit of confidence, either to hold positions or to tell you that perhaps maybe this is the time to get out. I'm going to pass back to Anna, and perhaps we're going to have a look at another chart. So it's been an interesting move, and it's nice to, yeah, Anna picked a good one there. Lots and lots of lessons on there. And I would urge you, if you're learning VPA, go to a fast chart and just read a fast chart in real time, because the lessons are all the same. Whether you're on a 1 minute chart or a daily chart makes absolutely no difference whatsoever. Now, what's interesting looking at that, I was focused on the 3 minute chart, but I'm now looking at the 30 minute, and my eye is instantly drawn to the fact we've got volatility. And it's another powerful reason for using multiple time frames, because what that is telling me is that there's volatility on 30. And given there's volatility being triggered now, we've moved outside the average true range. I'm anticipating at the very least some congestion to follow. In other words, some sideways price action to follow. And that will certainly be reflected on the 3 minute chart as well. So if I saw that on 30, more pertinent if I saw it on something close to me, maybe if I was on 3 minutes, I saw it on a 5 or a 15 or a 10, something like that, even more powerful. But it's telling me loud and clear, look out, we're in volatility land. It's no great surprise, because we've just gone through the London Open, and invariably you see volatility coming in on the London Open anyway, and quite strong reversals as well. Just looking down at the 3 minute again. Now you're seeing some really strong volume coming in there. That's powerful volume. That looks like some strong buying. So what the previous two candles, as we suspected, are really what we call stopping volume coming into the market, bringing this move to a halt, if you will. It's like, well, it's like stopping anything. If you're trying to stop something that's fast moving, it's going to take effort. It generally doesn't happen in one candle, because if a market's falling fast, particularly in a fast market downwards, then that is going to take effort. It's, the market makers, they can't stop a runaway train just dead in its tracks. It takes effort, and it's the same here. On that last candle, we've now got some indecision, which is perhaps what we expect to see, because I highlighted on the 30 minute, we've got the volatility triggered. So precisely that is now appearing here. We've got a little mini long-legged doji candle, if you like. We've got lots and lots of volume underneath it. That is not indicative of a reversal. That is purely indicative of indecision. So the market is a tug of war on that candle. Tons of people on one side, tons of people on the other. No real outcome from the event. It's just stagnated around the center of the candle. But the candle wicks obviously indicate that there is lots of volatility, lots of buying and selling, lots of pushing and shoving around that particular price point with a ton of volume below. But it's not indicative of a reversal. It's purely indecision. This is not a hammer candle. This is a long-legged doji candle. You can see there on the Renko, just moving over to the non-time base, you can see that move reflected there. And I would urge you to, and again, you've got the resistance overhead with the strong single line. The indicators work exactly the same on the Renko, not all of them, but the ones that we show here, we've got the trend monitor, we've got support and resistance, we've got the trend dots, and we've got the pivots. And as you can see there, what the Renko does, it smooths that choppiness. And it's a great way to, as Anna said, to look for entries. You can use it in many different ways. You can either use it as an entry trigger, you can use it as a supporting mechanism for the choppy price action you always see on candle-based charts, or you use it as an exit mechanism. It's just another supportive way. It's a blend. You're using a non-time-based approach blended with a time-based chart, because on the Renko, time is not a factor, because the governing factor on a non-time-based chart is whatever the metric is, and for Renko, it's the brick size. You can either use the ATR, as Anna's using here, which is calculated for you by the indicator. So it's giving you the optimal setting. You don't need to know what the setting needs to be. The indicator delivers that automatically for you, so you're trading at the optimal speed. Of course, it has the option for you to set it if you want to set it at a pip, pip and a half, 2 pips, whatever it is. But the indicator will give you the optimal ATR setting for that particular pair at this particular point in the trading session, which of course changes in 5 or 10 or 15 minutes. If you refresh it, you may find that it's changed slightly, so you change it accordingly. Things change throughout the day. It's the same with tick speed settings on tick charts. Exactly the same principles. Nothing is fixed throughout the session. These things change, and you have to adapt and change them accordingly. Just going to switch off and hand back to Anna. I've been talking for a long time. Get a change of voice.
No, absolutely, and thank you, Chris, for that. It was a fantastic real-time explanation. It's we can't beat David on. No one beats David on that score. Right, just to go back to the Renko, this is it was picking out the resistance that we could see moving into just ahead of the the London session here. We saw the 3 tests of that level there. We've got 75.67, and if we've got it here, let's have that 75. We've got 75, 75. Actually, we've got to go on the brick here. This is 75.67. Yeah. So it's the levels will never be identical on the 2 charts, but it will give us the sort of regions that we are looking at. So you can use them. You have to use them in tandem. But have a look at, by all means, have a look at the, we use a time-based chart to enter, but having the Renko as well, it helps to keep you in, as David says. It does give you potential entries for. This was the move lower that we've seen that David has been talking through. We did get a change in red trend dot, and we've had a change in the trend monitor. There may have been enough in this move lower, because it was the London session, to be able to take a trade, and you will see that across all the pairs. But what you also have to be very, very conscious of is you must have a slower time frame to benchmark what you are seeing on the faster time frame chart. And also be aware what we have here. We've got this move higher in the pound Canadian, and we have a 2-bar reversal here. Now, under 2-bar reversal, that's a sort of shooting star. You overlay one or the other, you see a shooting star. It comes at the top of a trend, and a lot of traders say it's weakness. It's telling you there's weakness. The 2-bar reversal tells you there is going to be weakness ahead. Whatever happens, this price is going to move lower. Or if it's at the bottom, it's going to move higher. And that is a perfectly valid technical signal, technical analysis. You can do all your analysis. You look at the volume underneath it. You think, great, something's going to happen. But it's when it happens, and this is where you have to be aware that with this market, it is 24 hours. But when you get these crossover periods, this signal that will appear on your chart in different time frames, you have to kind of look at it from the perspective that, because you're in the crossover, because there's going to be a whole load of new traders coming in, sometimes they don't play out. Now, this one did play out, but the subsequent candle was on a volatility. The volatility indicator was triggered, which triggers in real time. It doesn't wait until the candle is finished. So that tells you that potentially, although it did carry on, and it carried on quite strongly, there was a lot of momentum under that move. It actually bounced off this support line. The likelihood is that there's going to be a volatility. Secondly, the price is likely to reverse back into the spread of this candle, and we can see here there's quite a lot of buying under that wick. So yes, you can look at technical signals, but just be aware of when they appear. And also we have to look at it, as I said, in the context of what we see on the daily chart. And what we're seeing, this little pullback, is we're seeing the correction from the high of this daily candle. And are these corrections tradable? Yes, it depends on the width, on the breadth, if you like, of the corrective move. Because if you're on the faster charts, that's what you're looking for. And the corrective moves can be, if it's a pair such as pound yen, a corrective move on a fast chart could be something like 80 pips. But on a less volatile pair, I mean, pound CAD is not, it's not particularly volatile, is it, David? No, it does range, but it's not particularly volatile. It can be only 20 or 30, and you've got to decide whether you want to take it. And ironically, the euro dollar, which is a hugely, obviously, a very popular pair that traders like to trade because the spreads are so narrow. In fact, it's really difficult on to take to have a decent amount of pips on corrections and reversals, because it doesn't necessarily range very far, and the ranging of pairs is different in the different time frames. Now, going back to the Renko here, this has actually stayed red. This is the buying that we saw on the time-based chart, but it looks like it's still saying actually nothing major has happened from a price perspective, because we've got okay, the dots went grey, but they are still red, and this is still red as well. So I think really interesting from all sorts of different perspectives. And just let me bring back let's have a look. In fact, what I've got here as well, I have a pound index here. I haven't even looked at the matrix yet. This is the latest indicator that we've developed that we have developed. And if you've got the full package, both MT45 and NinjaTrader, it's automatically added to your package. It's one of the features of traders who invest in the full package. You don't have to invest in the full package, but if you do, when we develop new indicators, they are automatically added to your packages. This is the pound index. This is actually for free. You don't pay us any more money. This is the 1 hour chart, and we can see here, this is the pound. This is there seems to be some selling coming into the pound. It's just giving us another view on, as I said, there's a British pound, there's a euro index, there's a yen index, and then there's a dollar index as well. And I just want to bring up, here we are, let's have a look and see what's happening on our combination of matrix and CSI. Let me just pull the CSI up here. Yeah, in fact, this is the sharp selling off of the British pound. The Canadian hasn't quite sort of turned up, but there's certainly selling of the British pound. And in fact, if we were looking at a pair, what is it selling off against? Well, the yen's going back up. Let's pull that down again. Let's see where the pound is at the moment. Go back on there we are, the pound Canadian. That's the move that we're seeing lower. It was, as I said, when we first started at 7:30, it was right up here. It's fallen down here. Pound yen is at 21. Pound Swiss seems to be that seems to be a nice sell on there as well. So all in all, if you were coming now, if you were, this is when you were joining this session, you would look at this and you say, okay, what's been moving, what's moving at the moment, where are my opportunities? And if you're not looking for an opportunity, you don't care where the opportunity comes from, and you were, say, you traded, I don't know, your preferred pair was cable, we say, well, what's cable been doing? Well, in fact, ironically, if we look at cable, the pound is kind of falling with the US dollar, and yes, they're selling of the pound, but because they're moving in the same direction, it's probably going to be a little bit tricky to find a really nice move in cable at the moment. Doesn't mean it's not going to happen, but what do you want to say something on that?
Yeah, only very quickly.
Okay, fine.
Sorry to jump in, and just to say that part of the reason that obviously the pound CAD has stalled a little bit is because the pound is now falling more or less in line with the CAD. The CAD's bottomed out a bit on the faster time frame, but that's another reason. And when you're looking at the CSI, it really does give you a heads up instantly as to which pairs to focus on and which pairs to ignore for the time being, because if they're moving together, they're in congestion. If they're moving in opposite directions strongly, like the pound Swiss, for example, or the pound yen, then they are strong trends developing in those currency pairs. If you've got them moving in the same direction, like the Swiss yen, the green, and the magenta, they're rising together. Pound and euro, for example, they're falling together, so not much of a trend there. Pound, as Anna said, cable, pound, the yellow line and the red line falling together, not much going on there. New Zealand's kind of flip-flopping around, the white line in the middle there, so that's probably not moving very strongly in anywhere on those time frames. And the Aussie's sort of flatlining down at the bottom there as well. That's kind of flip-flopping around. That will give you all the information you need. You look at it in multiple time frames, and you then pull it apart, put it back together again in terms of the pairs to trade. You're looking at the currency strength, you're looking at the currency array, you're looking at the currency matrix, you're looking at sentiment between the two currencies, and off you go on to the next trade.
Just to go back to the 3-minute chart here, this is the sort of sideways action that we're seeing at the moment. And the other reason why, as I said, we've had this stall, as it were, because we had the volatility, you will get momentum coming in. It certainly drove the pair lower. Once that kind of starts to dissipate, it tends to just go back into the spread of the candle and kind of calm down. And it just needs time. It needs time to, as I said, to calm before the direction is either then re-established or we do get a reversal. You do get a reversal of the volatility candles, and volatility candles of themselves also act as their own support and resistance. So for this move to continue, we could get a move higher within the spread of this volatility, the high and the low. So you could say, this is a 30-minute chart, you could say, yeah, is there enough in there for me to take perhaps a trade within the range of this candle? Perfectly feasible, especially if it's a big fall or a big rise. On the faster time frames, you may say, well, I'm actually going to wait until it clears the top or the bottom, or it simply just congests within the spread of this candle. But the indicators, the CSI, will certainly tell you if you're likely to get congestion as well. So anything else you want to add to that, David? Is that it? Yeah. Do you want to move over to you? I think actually we're going to stop there because we focused on one, but it was just such an interesting chart from all sorts of for all sorts of reasons, and you can. That's what we do. We do showcase the we like to showcase the indicators. I said we have some of our customers here, and it's nice to share. These indicators are very sophisticated. You can use them on many different levels, and you can use them in many different ways. And the way we've designed them is you can integrate them into, if you have already developed a set of tactics, and there's nothing wrong with you integrating them into what you already have and just sort of boosting the tactics that you've been using, and certainly with volume price analysis as well. What volume price analysis does more than anything else, it really takes down the fear that all traders suffer from, because we all live in an uncertain world, but in trading it's even more uncertain, because the markets are hit by fundamental news, unexpected events, Donald Trump's tweets, and we've had a perfect example this week. It is very, very uncertain, and you can have something that can take away the edge of that fear, and we believe that BPA does that for you. Then it just will make you a much more relaxed and a happier trader, hopefully. Right, very quickly, I've just got to bring up just a couple of things I just want to share with you very quickly. If you haven't come across the indicators before, the details you can find at quantumtrading.com when it loads. This is the front page of the site, and these are the platforms that we have at the moment, but we'll be looking to include TradeStation. We're going to be working on that fairly soon. The platforms, and then beneath that you can actually let's have a look at trends, something different. Just click on the individual indicators and it will bring up all the the videos and the support pages that would explain why we developed them, how you can possibly use them. And as I said, it's really a question of integration. You know, if you've got some tactics, then these are there to, you know, to help you refine, if you like, the tactics that you work out. And if you're a new trader and you're thinking of entering this market, then what I would say, as a question I'm asked, is first of all, the decision you have to, from our perspective, is you can use the indicators. If you're not a VPA fan, you can certainly use the indicators. Buy one, and one we always suggest you start with is the currency strength indicator, because you have to disassemble this market into its constituent parts and see what the market is either buying or selling. So that's how you can start. If you're interested in VPA, as I said, you can just do it from the books. Buy the books on Amazon and read through them. It's $9.99, the Forex library. It's VPA plus the other aspects that we think you should understand about Forex trading. And we have traders who trade very successfully just based on VPA and just use their own indicators, and away they go. So that's the one, that's how you can do it. Or alternatively, as I said, you can invest in our own program that we've put together, which is VPA plus the indicators plus the additional modules that you see here, the psychology of trading and what we call the mechanics of trading. The technical analysis module is, as it says there, it's a forensic study of price and volume. It does build on what is in the books. As I said, a lot of traders just use the books. They're perfectly happy with that. They're absolutely delighted. You can go onto my Twitter feed. I don't know how many Twitter people are on there, David? 6,000, 6,000 or 7,000 on there. The vast majority of them do use VPA. A lot of stock people on there, and you can read the comments. And you know, it really has. It's that missing. We believe it's that missing element to understanding what is happening on the chart. That's what I've got to say. Anything else you want to say, David? But you can start with just one indicator and the books. That's it. Brilliant.
Check out the CAD Swiss.
The CAD Swiss. David's right. David has actually been looking at the CAD Swiss, so maybe we'll do a little post on that later. Is that okay? And put up on the blog. Right. It just remains for me to thank you all for coming along today. I hope you've enjoyed it. I hope you've learned something perhaps that you didn't know before. We are not back. Normally we have 2 other sessions today, but for various reasons, personal reasons, we won't be back today, but we are back next Thursday, where we will be back with 3 separate webinars during the day. Anything else you want to say?
Just to say that there was a glitch on the US session, and if they will need to re-register.
Oh, right, yes. If those of you who normally come along to the session that we do for the New York Open on Forex, basically, it's us, we've screwed up the GTW. I can't actually blame GTW on this occasion. You will have to re-register for those. Mea culpa, mea culpa. It's at 12:45, as I said, but that will be next week. But there is an email going out on that as well. No, you just go over to my site, annacooling.com, and you can sign up again. So have a great trading day, have a great weekend, and we will see you next time. Take care.